Hey everybody, welcome back to Dividend Stockpile, where we talk about all things income investing. So one area of income investing that I don't really talk a lot about, but is a big part of my investing criteria is option selling. So I wanted to talk more about how option selling, and how you can bring it to the next level and create life-changing income from your portfolio. So today I'm joined by an options trading expert, Erica Joan with Abundantly Erica. She created a full-time income from options trading without the full-time hours that it takes in a regular job. So then she traded long hours in advertising and production and turned it into trading options for a living. So Erica has a great website and a great YouTube channel that we're going to be talking about later, where she talks about all kinds of options trading, rules, systems, watch lists for options. Pretty much she's our expert. So I wanted to have her come on and talk through how you can build a lifestyle out of options trading and replace your 9-to-5 income with options income. So Erica, all that, welcome to the channel.
Thanks. And that can all be done.
Yes, I love it. So many of us dream of living off of our portfolios and being able to quote unquote retire from the rat race early. And you've been able to accomplish it. And so I think that's amazing. I'm on my way there, but I'm not quite there yet.
Yeah.
So I really wanted to get you on. And just so everyone knows in advance, it's not like you're buying YOLO calls on meme stocks.
No.
You have a very specific strategy, low risk, high quality. So that's why I really love your approach and wanted to share your message here on the channel. So
yeah, I think that's really important. I think that's really important. So yeah, I love the YOLO being that like, hey, you only live once. So like, are you really gonna sit there at a 9-to-5 all day? Yeah, there's a better way to live, really. And I think it is like using your assets to turn out money, which is what I'm doing, that you can then live off of. But yeah, I do it in a very like risk adverse way. Like the stocks that I pick are the market leaders and the giant corporations. And so that creates a lot of stability for what I do with options.
Absolutely. Yeah. I mean, there are some people that have made their money off of a lucky bet on a meme stock that went up 5,000% or something like that.
Yeah.
But they don't talk about all the failures they've had and all the times where they bought calls and it went to zero. And so that's not what we're talking about here. We're talking about a systematic approach, lower risk, strategic, a little bit of money in each trade over time builds this huge income potential. So we talked a little bit about your background in the intro, but can you tell us what like the transition was from when you were working a full-time job to then when you realized that, hey, this is something I can actually do in options trading?
Yeah. So I actually had a friend and a business partner type person who introduced me to the covered call. He just kind of pulled me aside one day and was like, hey, have you ever heard of this thing called the covered call? It's an options trade. You can do it with stocks. I'm like, no, what is that? So he sent me a couple of YouTube videos. I watched them. I verified with him that I got the strategy right and I did it. And I was like, this is kind of crazy. Like, this is too good to be true. So I kept doing those and I was like, this is really great. What ended up starting to happen was that I put more and more money into it as I became more confident, because before that, believe it or not, I was like a cash person. I kept my money in cash. That sounds insane. I did have like stock investments, but I was also like, I had a heavy cash account. And so I kept taking more and more of the cash as I got more comfortable with the covered call and moved it into generating more income with the covered call. And then like I started fantasizing about the days that I could just live off of that. That's literally what happened to me. And then it got to be a little too frustrating thinking about building my account to that size that I would need it to be to fully be work optional. And so I started taking all these other courses on how to trade options and did like a 2-year deep dive on education. And that's kind of how I developed like my system and what the trades I wanted to do. And more specifically, like the trades I didn't want to do, like how you're talking about those YOLO things. There are ways you can gamble with options. I don't do any of that. And so that's kind of to stay out of the gambling mindset. I just really built myself a system that would continue to compound wealth over time.
Yeah, that's exactly how my approach is. I keep it very conservative. I personally do cover calls, cash secured puts, an occasional long bot call, do things like that. But I don't do any of the more risky, more, high gamble, if you will. I keep it pretty consistent. But, over the last 5 years, I've been able to build up my accounts pretty significantly. Some years it's 50% returns. I'm at a little bit over 100% returns over the last year. Like it's real money that you can actually use to live off of. You just have to learn how to do it and how to do it safely, which is one of the things I love about your channel is you do teach that.
Yeah, and it's crazy because, I'll have people say to me, "I mean, do you really make 50 to 100% returns?" I'm like,
Mhm,
"Yes, I really
mhm.
do. I really do. I
Yeah.
really do." And even, I had one year, the worst year that I ever had was in 2022.
Mhm,
But I was so thankful for that year when it happened because it showed me that I actually did know how to trade in a downward direction because like you don't know how to trade down really until it happens because you can know hypothetically how to do it, but you don't know if you're going to be able to keep your emotions in check.
mhm,
But honestly, when that happened, I was just like, oh, I can retire sooner than I ever imagined because I only took a 30% pay cut on
mm,
options income that year. And I was like, okay, 30% less money is all that is going to happen to me. Like, I'm not like, there wasn't any fear left in me at all due to
yeah.
that. So,
It's really good when you have different market cycles that you've
mhm.
proven yourself through, improving the strategy through. You feel more confident, taking that leap to make it your full-time job, if you will.
Yeah, there was somebody who I spoke to last week. It was like a client, a stock trading client, who was saying that they're going through a proof of concept
Hmm.
right now. So they're like doing the options trading to try to find out if they can really make it work for themselves to retire early or whatever. And the whole bad cycle was really gave me my proof of concept that like, oh, I don't actually need a 9 to 5 anymore. I do work though, guys. Don't get me wrong. Like I love to work and I love to like do things like talk to you and do this options course that I do. What I am is I'm work optional. So I only work on things that I love to do anymore. And it's weird because earlier this week I had to do some work that I didn't want to do. And I was like, I am like allergic to this now. Like
Hmm.
I just got home and I'm like, I am not doing that again.
Yeah, it's amazing what we put ourselves through in a 9 to 5 to get the job
I
done,
know. I know.
when there's so many other options out there. So a lot
Mhm.
of people hear, okay, let's save up all your money, put it in investments. When you get to 59 and a half or 65 or whatever it happens to be, you withdraw 4% of your portfolio, and hopefully you don't run out of money before you die. And that's not my approach. That's not what I want out of life.
No.
And so, option selling, along with my other income strategies like dividend stocks and dividend ETFs and options ETFs, things like that, are going to be able to build me that cash flow that I don't actually have to sell off my shares in retirement. And we were talking before we started recording, my goal is to have my wife be able to retire or be work optional, like you said you are, over the next couple of years. And so I'm hoping to get her to be able to retire before, 50 years old, hopefully
Yeah.
sooner. And
Hmm.
so that she can live the life that she wants. She can go to the kids' school events. She can go take them to college trips. She can do all these things that her regular job right now won't allow her to because she's working 50, 60, 70 hours a week sometimes. It's ridiculous.
Yeah.
So by building up these skills of how to support yourself through your investments can change your life. And I know it has for you.
Yeah, it really is a skill set. I think the other thing too is there's a couple of things that you just said there. The first thing is that your wife has all these things that she has to do. And we all have these things that we have to
Hmm.
do. I now my life has become so busy with other things that
Hmm.
I'm like, how did I fully like work all the time before? I don't even understand how I did it. Like last week, my mom is okay, but she broke her neck in two
Oh,
places. And
wow.
I'm like, what the heck? So I went out to go see her. And then my kid's going to college, and that's going to be a 5-day trip to go get him set up. And I'm like, how do people with normal jobs do this? They kind of can't. They
Yeah.
can't be there for
Yeah.
everyone in the same way that I can. And, I think it's just about like, for me, the options trading has just become the solution for everything. Like, it's a solution to have a more robust marriage, like just being able, I took a trip for 5 weeks or 6 weeks this summer with my husband. I mean, it's
That's
just
amazing.
been the solution for everything, even paying the medical bills or whatever like that. It's the solution for everything. I can't
Yeah.
remember my other point right now, but you
Yes.
were saying something about retiring early. And oh, well, the whole idea of taking 4% out of an account and
Hmm.
like having to watch your money dwindle away, to me sounds horrifying.
Hmm.
And you absolutely do not have to do that. You do not have to do that. You can just pull in money from options trading, simple covered calls, and
Hmm.
take in money on your retirement income like every month, and your account can actually get bigger over time. That's
Yeah.
another option you have.
Yeah.
Your financial advisor isn't going to tell you about that. You do have to go other places to get that information. And I'm not saying you shouldn't have a financial advisor. I'm saying that you should probably just look around,
Yeah.
right? Have a financial advisor and then also trade options.
Exactly. I mean, I think, the 401k system that we've had here in the United States, and the typical mindset of just putting your money into low cost mutual funds or ETFs or whatever happens to be, and hope that it's what the level you want when you retire. That's been ingrained in us for generations at this point.
Right.
And so no one really talks about alternatives. And that's what we're
Right.
talking about today, an alternative way of approaching your investments
Mhm.
to make it what you want it to be, as
Mhm.
opposed to what society is telling you. You're 65, you're 67, now you can finally retire. And oh, wait, I'm too sick to do anything. I just, my life, like you don't want to have that lifestyle. I want to be able to go to the national parks. I want to be able to go on the college trips. I want to be able to do all these things, not when I'm 67, maybe when I'm 47 or 57. And
Yep.
options is a great way to do that. So we talked about a lot. Oh, one other thing I want to mention is, like you said, you can do options trading from pretty much anywhere in the world,
You
which
can.
is
Yeah.
fantastic.
Yeah.
We went on some cruises over the last couple of years. My wife was trading while we were on our cruise. Like,
Yeah.
you get the data package and you're good. You make a couple $100 a day and you go live your life. There's so
Mhm.
many ways you can utilize option selling.
Yep.
That's awesome. Okay, so let's dig into it. So high level,
Mhm.
someone really hasn't ever touched options. What are some basic concepts behind it?
Okay, so basically the basic concept of it is that you are buying and selling contracts for share ownership of companies
Mhm.
in lots of 100 shares. So the covered call is the simplest trade out there, and it's usually the one that people start with. That's definitely what I would start with, and I would advise people to do that, even preferred over the cash secured put. I'm a rare person who says that, but I know I'm right. Okay.
Well, you have the system to prove it.
And I can explain that on a different YouTube video. But so you're basically saying, hey, if Amazon's $225 today, if I own Amazon shares or I just bought them, I will sell somebody else the right to buy them for me for $230 a share, and I'll
Yep.
collect $400 for the right to get for them to buy those shares for me right now. It's my money right now, 400.
Yep.
And then I have the opportunity potentially to make another $500 if the shares reach 230. The buyer gets to take the shares from me. If the shares don't go to 230, I get to keep the shares, but I'm also keeping my $400. And guess what?
Exactly.
Then I can do it again,
Mm-hmm.
and it's
That's what.
beautiful.
Yeah, that's the best part of it, is that you get that cash up front in your account right
Mhm.
away.
Mhm.
You can use that cash to live off of, or you can use that money to go do more options, and you can build up
Right.
your account that way. So that's covered calls. You own the shares already. You're willing to sell them to someone else. For
Mhm.
giving that person the right to do that, you're getting money up front with the obligation that if it goes over that certain price that you've chosen in your contract, you have to sell your shares.
Yep.
But if you're willing to sell them anyways, why not get some income while you're doing it?
Exactly. And also, it's just a rinse and repeat strategy. So some
Mm-hmm.
people just say, oh, well, like, Amazon then went up to 240 and you lost all of those cap gains. That's true. But in one hand, I got $400 today, and nobody
Mm-hmm.
knew where the stock price was going to go.
Yep.
And usually when Amazon goes up to 240, it does drop back down to 230. I'm just saying. So, like, it's sort of like, there's these things that people are worried about happening that often don't happen or aren't really a problem. That's kind of like when I was trading options and my financial advisor didn't want me to do it. That's what he would tell me. And I always come back to me a year later and say, hey, guess what? How I'm doing, Ted. But it's a
Exactly.
rinse and repeat strategy. So it's sort of like if you do a covered call once, it's going to be $400, right? That's all
Mm-hmm.
you're going to get. And maybe you did short yourself on a cap gain. I don't know. But if you keep doing it over and over and over again, that's where the rubber hits the road. So
Absolutely.
what we're suggesting and what we talked about before we jumped on this call is that you could have a certain amount of your portfolio in options trading. Maybe not
Mm-hmm.
all of it. If you have a $1 million account, maybe it's 250K in options trading, and that money is making you something like a 20 to 100% return per year.
Yep.
So there's ways to risk define your portfolio with options, saying I'm only going to put this amount of money in options. That
Yep.
being said, I don't feel like they're risky at all because I'm an expert level trader and I have so many option strategies going on. I know how to protect my account. That's
Absolutely.
the other thing about options. You can actually protect the value of your account with options. So when certain people are saying, oh, options trading can be so risky, I often am like, do you know how risky it is to have a whole portfolio and not own any puts?
Mm-hmm. Especially at the market at all-time highs,
Yep.
Nvidia and Google and all these other things are shooting up. what happens
Mhm.
when they don't shoot up? Like,
Exactly. So there are
it might feel great now,
yeah.
but think back to April where everything crashed, or
Yeah, so there
2022.
absolutely.
Yeah.
Absolutely. So that blows people's minds, but there are people that got really rich off of that fall because what they did was they bought put contracts, and those put
Hmm.
contracts, when the stock sinks, those contracts become more and more valuable, and they get to sell them on and make a really tidy profit.
Yep.
So yeah,
Yeah.
there's
So
so many different strategies you can run.
there's a ton of different strategies, but for a beginner,
Yeah,
something like the cover call is definitely the way to start.
it is.
Build up your comfort level with that and
Mhm.
move on. Just to keep on the other real simple side, what is a cash secured put, since you mentioned it earlier?
Okay, so cash secured put is just going to be saying, again, let's use the example of Amazon. So Amazon right now, let's say it's $220. What you're doing is you're saying, hey, I will take your shares from you at the price of 215 if Amazon goes below 215. So it goes to
Hmm.
210. What ends up happening is you're buying the shares from somebody else for 215. Now they're worth 210. So you have to have more of like a strong gut for this trade. But the thing is like you bought Amazon. If it went down to 210, isn't it going to go back up? That's the beauty of these monopolies
Yeah.
is whenever they have a dip, they tend to rise afterwards. Like if you go look at the Amazon chart, you're going to see that I'm correct about this. But you'll get paid to enter the contract. Similar
Yep.
amount as the covered call. It's going to be another $400 for you.
Yeah.
So
But with
for
the cash
something
secured
like a
put,
3-week contract. So that's the other thing that we need to explain is that there is an expiration date to these
hmm
contracts. You're not locked in forever, and you get to choose the date that it expires and the amount of time that it goes over. Like 1 week is going to pay less than a 4-week contract.
Yep.
Okay. So I was talking right there was referring to 3-week contracts. That's usually my favorite trades are 3-week contracts.
Okay. Yeah.
Okay.
Personally, I'm more of the 1 week to 10
Okay.
days, but there's
Mhm.
tons of different strategies.
Right.
But with that, you're building in some downside protection before you own those shares. Because if it's
Correct.
trading at 220 today and your contract's for 215, you have that $5 downside before you're obligated to take that contract. And
Correct.
so that's a good way to build in some protection and
Mhm.
still get paid income while you're waiting for the shares to drop in price.
Absolutely.
Okay. So covered calls, cash secured puts, two very basic, straightforward, entry level type of trades for options trading. But with that, you can still make a very decent income.
Oh yeah.
My goal personally is when I first do a trade, I'm looking for at least a 0.5% a week on that trade and
Okay.
immediate premium, plus
Mhm.
the capital appreciation that could happen and all those other things that go along with it. But that gets you to a 26% return very conservatively over the
Mhm.
year.
Yeah.
How many times have you seen the S&P 500 or the overall market go up 26% a year on a stable, consistent basis and pay you while you're doing it? Very rarely.
Mhm.
And to be honest, a 0.5% a week is a very conservative strategy.
Mhm.
I've heard many other people go for 1% a week or, you
Yeah.
know, 5% a month or whatever it happens to be. It's what
Mhm.
your comfort level is and your risk tolerance.
Right. And the one thing that I would say there is, and I really want people to hear this, don't I would not try to go for more than 1% a week
Hmm.
on a cash secured put or a covered call because the risk profile of the stock is really a lot bigger. So
Hmm.
when I hear people trying to get 2% out of a covered call or cash secured put a week, I go like, whoa, stop.
Yep.
Don't do that. If you want to try to get 1 to 2% a week out of options trading, learn some advanced strategies instead to run on the best stocks still. Okay. I
Exactly.
really want
Exactly.
people to hear that. So if you go and try to make 2% per week on cash secured puts or covered calls, you will cry one day because the stock will fall dramatically and you'll
Yep.
be really sad. Okay. Just
Yeah,
saying.
exactly. So the way I always tell people is like, why would a buyer of your contract be willing to pay you so much premium to get you a 2% return a week? It's because they think something's going to happen to that stock.
Correct.
The chances of it going down 10% or 20% during your contract is very real. So they're
Mhm.
willing to pay you 2% for that protection of that
Yep.
remaining 10 or 15 or 20%. And I know plenty of people, especially back in 2022 and some other times, the stock went down 50%, 75%,
Mhm.
and now they're stuck with it because they did a really aggressive cash secured put or something like that. So everything has a trade-off, everything has a risk associated. We need to
Right.
learn what that is.
Right.
One of the ways you can determine what the risk level is delta. So I know it's a pretty easy concept for people who've been doing option trading for a while, but can you explain how that correlates to the risk you're taking?
It's interesting. I don't really feel like I experience it that way. What I
Okay.
do is I look for options premiums. And if I see anything that is above, I have this way that I do it where I think you guys can get this from me on YouTube. If not, I'll share it soon. Where I look at the percent return
Hmm.
on premium and cap gains. And if it's over 6% for a 3-week period of time, that makes me nervous. And I go
Hmm.
like, okay, so I'm not going to have a lot of my portfolio in this, or I'm going to trade it very minimally or
Hmm.
whatever. So like, for example, Amazon has something like a 4.3% return over a 3-week period of time. So that one's fine. Nvidia is higher.
Hmm.
Waste Management and Walmart are way lower because they're more conservative. So that's the way I tend to risk assess things.
Yeah.
So
Yeah.
I don't really look at deltas
Makes sense.
actually. Why don't you explain the delta
Sure,
bit?
sure, sure. Yeah, so there's different approaches, and obviously you have to find what works for you.
Yeah.
I would say the most elementary way of determining the risk is something called delta. So that is a mathematical formula to determine what are the chances or the relative chances of your contract going against you or being assigned. So if you're doing a 20 delta, there's an approximate 20% chance on average
Oh, I see what you're saying
that
here.
you're going to
Okay.
get assigned or having to fulfill the contract, which also means on the opposite side of that, as a seller, you have an 80% chance of it not going against you, meaning you keep your shares or you keep your cash and you can do another trade the next time. So a 20 delta is a very conservative approach. You can go to 30 deltas, 50 deltas, and so on. But the higher your number is the higher percent chance, the likelihood is of the contract going against you as a seller.
Okay.
That's not necessarily a bad thing, but you just have to
No.
be aware of the risk potential.
Yeah. So the other way you can explain delta is every single time this stock raises
Hmm.
$1, the options contract increases if it goes up by 50 cents. So if the stock goes up and you have a 50 delta, the value of the contract that you just sold goes up by 50 cents.
Yep.
So this is kind of complicated to explain, but when you get on the leap side of things of buying contracts, it's
Yep.
really important to look at deltas, and you want to get a higher delta versus a lower delta.
Yep.
Sometimes when people are selling contracts, they prefer smaller deltas as opposed to higher ones. I often disagree with people on that one, so that one's interesting. So it's interesting to hear you say it that way. Yeah, I have a different way of figuring out
Yep.
what is a risky stock or not for me. Yeah.
Exactly. And so for everyone's awareness, a leap is just a long-term contract,
Mhm.
usually over a year.
Yeah.
So today's in mid-August, you're doing it for 2026, second half of the year, long-term trades. And
Right.
so with that, you want a higher delta because you want your trade to increase in a high percentage proportionally to the stock gains. So that's a whole nother story. We can
Yeah, that's
definitely get
another
into
story.
that. I know, Erica, you have a bunch of leap type of trade videos on your YouTube. So definitely everyone check it out.
Yeah.
Okay, so we talked about the basics of options. We talked about what the potential returns are, some of the risk strategies. And you mentioned a couple of the stocks you trade right now. I have a couple that I'm favorable on, but can you kind of give a high level, just maybe top 5 of things people can start looking at?
I really love Nvidia, Amazon. I'm trading Apple. Apple's always like in the mix for me. Gosh, I'm trying to look. Okay, so on my public account, I'm trading Walmart. That's a little bit of a sleepier stock.
Hmm.
Very slow, but that's slow is good.
Yep.
Like slow compounding works. And then I have like 2 stocks that I'm trading right now that don't really meet all the metrics that I normally look for, but they're sort of fun. ASTS and Ionic, they're newer
Hmm.
companies.
Yep.
But typically I stick with all the big names. I also really love Costco, but that is a little bit hard for people to trade with because it's so expensive.
Was it like
Per share.
1,200 a share or something like that right now?
Right now it's like 980, which is
Oh,
kind of
980.
lower
Okay.
for
Okay.
it. I believe it's in a consolidation year, which is going to annoy me. But that's a normal thing for stocks to go through. That's a different video.
Absolutely.
But yeah, so those are some of my favorites.
Okay.
Microsoft is also a great one. Microsoft is one of the best ones you could trade. And then like I love Visa and MasterCard as well, just as long-term holds. Love those
Yeah.
stocks.
Yeah.
Mhm.
I mean, those are all high quality, huge names, very
Mhm.
tradable. People are always going to be flocking to them. So,
Exactly.
you have some stability there.
Yeah.
If you go with the really risky names, let's just say Rigetti Computing, like quantum computing, and all these other ones that you hear all these stories, those are the ones that can be risky. Yes, they can pay off well, but it's also a higher risk of something happening. But
Like
when you
another
have
one
the,
that I see everyone doing is master, and I'm just like, that is a
oh
rough
yeah,
road. Like that is a roller coaster. So like
absolutely.
for me, I want my life to be sort of like not like, oh my, like I don't want to go to Six
Mhm.
Flags
And
every
that's
day.
exactly what it is when you're using these volatile names. It's like, nope, no thanks. That's for a different person, a different
Exactly.
risk tolerance. So another thing you guys we can do, which we haven't mentioned a lot, is you can actually do cover calls and cash secure puts on ETFs as well. So if you
Right.
don't want to pick a particular name, you can do something like the SPY or the QQQ or the IWM small caps. You can pick different ETFs and do the same process with. So instead of owning one stock or having the potential of owning one stock, you can own a whole basket of stocks. So that will reduce your risk a little bit more if something drastically happening. But
And on a lot of them, you can do the trades more frequently, which
that's true.
sort of turns certain people on. It turns me off, but
Yeah, I
each
think
their own.
SPY is 3 times a week or something like that.
Correct.
Yeah.
Yeah.
Yeah. No, it gets a little crazy. But I think the whole story of this is there's many different ways to approach this, many different paths you can take. But whichever path you take, options trading can provide you that income to
Mhm.
really change your lifestyle. I think that's the one thing I really wanted to get across to everyone is that don't be afraid of option selling, but of course, do your homework and understand what you're doing.
Yep.
But if you can make 20% a year, 25% a year, 50% a year, that's going to be huge for your lifestyle.
I think I was just circling back to the thing I forgot. Okay,
Okay.
the only reason you haven't decided to trade options is because you were never actually told to do it.
Yep.
It's fairly new. It's super lucrative. When I say it's fairly new, it's not fairly new to the people on Wall Street, but it's fairly new to be available to the individual trader.
Yep.
Because options chains, that's where you can see all of the options that you can buy and sell, weren't in like normal brokerages like Schwab account. You couldn't go in and do this on your own 20 years ago, really, so much. It's fairly new.
Hmm.
So it's now that you can do it, and the reason why you can is because we have fast internet connections.
Yep.
That's literally the only reason why. Okay. So now we have access to them. And it used to be we were sort of like a little bit blocked off from doing these trades because the trading fees were $14, $15 per
Hmm.
contract.
Hmm.
Then some industry disruptors came along and they were like, hey, let's make these things $1 a contract or 50 cents a contract.
Yep.
Then these trades become affordable to the average retail trader. And people start to realize this and say, hey, we could actually teach retail traders how to do this. Like somebody starts a course, whatever.
Hmm.
So it's been infiltrating into the society, but it's in a slow way because people, they have a lot of resistance to change. And they'll be like, but why haven't I heard of this?
Yep.
You haven't heard of it because it's relatively new within the space. Something that's 20 years old isn't actually really that old. And
Yep.
I don't even think it became popular until maybe 10 years ago, where I started hearing people like, I heard like you could own options. I'm like, what is
Yeah.
that? Stock options. I could hear about it on the news. I'm like, oh, what is that?
Yeah. Well,
So it's new. That's why. That's
yeah.
why we haven't heard of it. And so if you were to get a financial education and you were to be given this information about like, okay, you could put your money in a CD, you could put your money in an index fund, you could put your money in buying stocks, you could trade stock options, and you were to look at them all from like the risk profiles that they are, and you were taught all of them in some kind of course,
Yep.
you would see the benefit of doing it. But it's just that not many people know about it still.
Agreed.
That's
Yep.
literally it.
Yeah. Or I think a lot of other people hear options and they think of option buyers, the ones that blew up their account trading risky options. And now they had to mortgage their house or they went bankrupt because they spent too much money. That's not what we're talking about. We're talking about
No.
much more consistent conservative approaches, whether you're buying a call, selling a call, writing a put, whatever it happens to be, there's conservative ways to approach it.
Yeah.
So back to the education, one of the main things that I know you're about is coaching, one-on-one coaching,
Yeah.
and teaching people how to do that. So just in a few minutes, can you kind of plug your website and your channel?
For sure.
Yeah.
You can reach out to me by email, eric@abundantlyerica.com. That it's with a C. If you want to get a meeting to discuss how our coaching program works. But we have a group, we have a community, and I teach 7 option strategies within that course. It lasts a year, but most people stay in for 2 years to really like graduate from the system and know that they know how to trade options in this way. I'm going to just go into 1 minute spiel about it, which is what you can expect to get is an education that will teach you how to trade a large account size in a very minimal amount of time per day. I only spend an hour a day doing it to make upwards of 30 to 50K a month.
Mm-hmm.
And these trades are all risk adverse and they're simple, easy, and fun. And the reason that I don't spend a lot of time looking at charts on the market. I don't even look at charts on the market. That sounds insane. I just trade quality stocks. And
Yep.
so this is a method that I developed so that I could go be work optional in my future. So
Yep.
there are many different ways to trade options. Like you can trade options so that you look at a computer all day. It's just I designed this way of trading and taking these trades that take a little bit of time, not much time at all, don't have much risk, and take advantage of high quality names because I want to do other things with my life.
Exactly.
And so that's what the course is about.
Yeah, you don't want to be stuck in front of a computer screen
Don't
or
wanna be stuck in
worried
front
that
of a computer.
you step out for lunch and then all of a sudden something blows up and you weren't there to see it.
Exactly.
That's not
So
what you
this
want.
course would allow you to trade stocks in a way that you could not spend that much time and you sleep really well at night, which is very
Absolutely.
important to me.
So I'll definitely put all your info up on the screen. Everyone
Okay.
definitely check out Erica's
Yeah.
YouTube channel as well as
You-
your website.
Yep.
Reach out if you.
I'm abundantly Erica on YouTube, sorry, and then Women Options Win on X.
That's awesome. Yeah. So we follow each other on X as well. So that's where we got connected to start with. Okay. So really appreciate all the information, Erica. To your point, you only spend a few minutes a week doing this. I think for me, I might spend 30 minutes on a Monday morning, seeing where things are and just doing the trades and moving on in my life.
Exactly.
I have a full-time job. I have 4 kids. Like I don't have time to sit in front of the computer screen all day.
Yeah.
So selling options like this is, a lifestyle choice that works for me.
Exactly.
And so that's why I love it so much.
Yeah.
All right. Erica,
Amazing.
Before we end, any last pieces of
Okay.
advice? Anything you want to say?
That's it. Just stick with the quality names. That's
Yeah.
all. That's all I'll ever say. Yeah.
Yeah, because at the end of the day, you have to be willing to own these shares because you are trading real stocks. So if you wouldn't want to own it in your personal portfolio, don't trade an option on it because there will be times where you're going to get stuck with the shares for a little bit while the market does this thing. And so you have to be willing to own the shares. So quality absolutely is a huge part.
Yep.
Awesome. All right. Well, thank you so much. Really appreciate it. And hopefully we'll talk soon.
Okay. Thanks, Jeremy.
Thanks. Thanks for watching. While you're here, check out this next video to learn more about dividends, income investing, and option selling. And while you're here, make sure you subscribe. Click the like button. It really does help.